Greeting fellow investors and traders. Our channel has been on an exciting journey dedicated to maximizing financial gains for both ourselves and our valued listeners. In our last video, we're thrilled to report a remarkable 17% increase in Broadcom over the past 7 days, with an outstanding 31% gain since August 18th. Long-term investors following our advice on buying the dips in the QQQ NASDAQ since January 18th of this year have seen an impressive 39% uptick. We're staying true to our mantra for the year: buy on the dips. Today's video will delve into individual securities, but don't forget to pay extra attention to our comprehensive market views video. We operate on a top-down system and firmly believe that picking stocks in a bull market is significantly more manageable than in a bear market. As seasoned investors, we adhere to a set of rules on the long buy side. It's crucial to remember that consistency is the key. We'll be sharing these rules to guide you through successful long-term investments and short-term investments. So let's kick off today's discussion by exploring the essential rules for investing on the buy side, and stay tuned for valuable insights and strategies on the 4 stocks that we are recommending today. Simple investment philosophy when buying: invest in bull markets. Focus on buying stocks during overall bull markets when the broader market is trending positively. Of course, it is much easier to buy on bull markets. When the whole market is going up, 70% of the stocks in the S&P 500 and the NASDAQ are usually moving upwards. Even in selective bull markets, 7-8 stocks like the Magnificent Seven usually pull the weight. We use oversold indicators. We try to avoid buying stocks solely based on positive news, especially if there's a significant advance in the stock's chart. Instead, we use oversold indicators to identify favorable entry points. We avoid cheap traps. Be cautious about buying stocks just because they appear cheap after decline. Cheap can become even cheaper, so it's essential to consider the underlying reasons for the stock's performance. All the stocks we are choosing today and all the stocks we have chose all year round are not cheap stocks. They are not stocks that went down 40, 50, 60% and we're saying, let's jump into those now. They are stocks more closer to their 52-week highs than they are to their 52-week lows. Prioritize uptrends. We are specifically on the buy side looking for a clear uptrend. All the stocks we will recommend today are significantly on an uptrend. Exit downtrends promptly. Exit position stocks that enter a downtrend regardless of the price-earnings ratio or any other financial information. Use risk management. And most importantly, maintain consistency. Stay disciplined and consistent in your approach. Avoid erratic decisions by making and ensuring that your buying and selling decisions align with predefined criteria and principles. These are our strategies. These are our indicators, and we are consistent with our indicators. In your approach also, you must be very consistent in your approach. Do not change from financial indicators the next day and one day technical analysis indicator. Decide on what type of investor, what type of trader you are, what type of indicators you will use, and be consistent with your approach. As you know, since the beginning of the year, we've been telling you, buy on all pullbacks. Nothing has changed in our recommendations today. Disclaimer: the information provided on our channels for educational and informational purposes only and is not intended to be a substitute for professional financial advice. Protect your capitals by all means. Do your own homework and talk to a financial advisor. You know, we look at a 3-part process: the overall market, the sector phases, and individual securities. We are bullish on the overall market. The reason we are bullish in the overall market is because of the presidential election cycle, because of historical great December and into January, because of coming off a bear market. We had capitulation of 20% and also recent capitulation a few weeks back. The sectors we are looking at is technology, it is Bitcoin, it is cryptocurrency, and it is the Magnificent Seven. This video is about the individual securities. The next video will be about the overall market. Short term, we are neutral. Intermediate term, we are bullish. Long term, we are bullish. All we're looking for is pullbacks. About a month and 1 week ago, we specifically went bullish intermediate term and further building our position on our long term since January 18th bullish. We are trying to get into a short term trade, but at these levels, we are still overbought, and we will be looking for high probability trades for the short term. As always, the first security ETF we are looking for is the NASDAQ 100 QQQs. And we are bullish this ETF. Why are we bullish this ETF? Well, let's start from the beginning and our rules of simple investing philosophy when buying. Are we in a bull market? Yes. We use oversold indicators. Well, for our intermediate and long term, we have been invested since January 18th, and we are holding our positions for a 39% gain since our video came out on January 1st, 18th of this year. Is the QQQs cheap? No. It had a 39% gain from the beginning of the year. Is it on an uptrend? Yes. Do we have stop losses implemented? Yes. And are we consistent? Yes. What are we looking for pullbacks? Well, we'll say we're looking for pullbacks at 350, 360 for the short term, or to build more positions on our intermediate term and long term. We will wait for a sell-off and we will be patient. Why do we say that there is a possibility that short term we will have a sell-off? Well, let's just look at our proprietary indicator, and every time this hits 100, we get a sell-off. Now, this sell-off might be 1-2%, and when it hits 0, we tell you, and we jump into the market. And when it hits 100, we just wait. This has worked very well for us recently and all year round, and we have been using this indicator for over 15 years. So the number at 96.52 is telling us not to buy short term right now. But even if we don't pull back, we have intermediate term and long term positions, which every 3 days we've been telling you buy on the pullbacks. Is the QQQ in a growth phase? Yes. Is the SMHs in a growth phase? Yes. Are many of the Magnificent Seven, which has a huge weight inside the QQQs, are they in an uptrend? Yes. The problem is the VIX and the VXN. We are seeing a lot of euphoria, and everyone believes we are going upwards in this market. The funny part is we also believe we're going upwards in this market, and we do not believe we see a major sell-off, at least for the intermediate term. What is also troublesome on the short term is the extreme level of the contract of the VIX. And when it's at these low levels, which is at a 52-week low, there is no fear in this market, and any type of news will bring back fear. That's why we are waiting on our short term. If you look at our short term, medium term, long term, and exit swing, we are bearish, with these numbers being very high. Thus saying that on the CCI Commodity Channel Index, we're going to say this is a neutral, as we predicted, it would bounce off the 0 level and then come straight upward. But at these levels, we usually see a little bit of sell-off, probably come down to the 0 level again and bounce up higher towards the end of the year. On our overbought, oversold components, we are 47.62, which is neutral. On our RMO, we are bullish, as all 3 indicators are telling us that the QQQs are going up higher. So what is the plan? The plan is for your intermediate term and long term to have positions open in the QQQs. We believe we are in a bullish market, and this will continue up higher. 7 days ago, we reiterated our position on Broadcom. In fact, we gave you a short-term bullish signal 7 days ago and telling you to buy Broadcom. We were absolutely right, as in the last 7 days since our recommendation, it is up 17%. So by following our YouTube channel with just one of our recommendations, it is up 17%. Thus saying that we're in this position long-term and intermediate term. We sold our positions on the short term. We've moved it to a neutral because of a 17% gain in 7 days. But thus saying that, we did not move out our long-term and intermediate term, knowing the big institutions got in, and this will be a good opportunity, and this stock will move up higher. If you're looking to buy into it now, we're looking on pullbacks to 925 to 950 with a 690 investing stop. Let's go over our simple investment philosophy when buying. Are we in a bull market? Check. Is Broadcom oversold now? No. So we will wait on our short-term position. Is Broadcom cheap? Well, it's up 39% in 4 months. It is not cheap. It is clearly on an uptrend. Do we prioritize uptrends in this security? Absolutely. Do we have a stop loss risk management in place? Yes. And do we maintain consistency in our approach? Since August of this year, when we recommended Broadcom, we are sitting pretty right now. As you see, short term, medium term, long term, these signals for overbought, oversold are very high. Thus saying that, it does not mean the stock will fall off by much. Wait for your opportunities to get in. A new recommendation, PDD Holdings, a Chinese company subsidiary, trades on the QQQs. Is this company on an uptrend? Is it trading above the moving average? This is an initial recommendation, and we're looking to buy on pullbacks to 120 to 130. If it crosses and closes above the 144 level, we will be buying a position inside of PDD, but we will clearly be waiting for a pullback on this company. But it is on our radar list, and we will further keep putting it in our top 10 IOI portfolio holdings and announce when we buy our first position inside PDD. What is very interesting is that the oversold, overbought indicators is at pretty good levels over here. Thus saying that also the CCI indicator clearly looks like an uptrend. So welcome to the list, PDD. Next, Airbnb, which we started recommended on August 10th, and each month we further put in a bullish recommendation on Airbnb. It has clearly not performed as well as some of our other companies, but it has broken out and we're seeing a move to the upside. Is it trading above the moving averages? Yes. Is it on an uptrend? Yes. Are we looking to build further on the positions when the oversold, overbought indicators get lower? Yes. If you also look at the CCI indicator, it is right now at a bullish level, but we believe it will follow the overall market, come down to the zero level, bounce off the zero level, and continue upwards. So today's recommendations are further buying in the QQQs, further buying on pullbacks on Broadcom, AVGO, if given the opportunity. A new recommendation of PDD Holdings. We put an initial bullish recommendation today, crossing and closing above 144 or buying on pullbacks to 120 to 130, and continuing looking at our Airbnb position and building at pullbacks to 125 to 130. You know the catchphrase: study it, analyze it, adapt it. Peace.